But it's starting to appear that FTX was just a front for Alameda to capture customer order flow. It's now becoming clear that FTX-Alameda, because we can now assume they're basically the same entity, which is very bad to have a trading operation that takes advantage of customers. We've also seen that they changed their strategy from being these lower risk traders doing arbitrage, them just providing liquidity all the way, and it blew them up. And they pretended it didn't hurt them. But it feels like there was never any proper accounting. That there was never any customer positions that weren't being used by Alameda. There was no particular Bitcoin or anything else that you thought you bought on FTX that was being stored for you. That it was just a giant pool of cash that they were just abusing. And it's becoming clearer, even after Sam Bankman-Fried's tweets recently to a journalist, that maybe he constructed his whole personality as well, and that none of that was real. So June was the actual damage, right? That was basically the nuke button to say, leverage and crypto, as we've always talked about, don't go together, right? So that blew up, massive balance sheets, Three Arrows Capital, all of them. But one of them was hidden, and we didn't know, and that was Alameda. We knew they were a massive shop. We knew they were kind of a bit sketchy, but they kind of said it's fine, but they weren't fine. So at that point, they were probably $9 billion in the hole, which is a staggering amount of money. Now, we don't know the exact numbers yet, and we won't do for a long time, but there were a staggering amount of money in the hole. And that was papered over by FTX.
When you say papered over, what does that mean?
They gave them FTT tokens, which is the token that is part of the FTX ecosystem that they control and Alameda control, and then gave them a loan against it. That's what it first appeared, but the plot's thickened a lot since then. But that's so basically they actually went up under in June. So what we're seeing now is the end of the June thing. It was the bit that didn't happen that did happen, but that cash was customer money. Right now, we're in the realms of bad. That's what the story appeared to be. And I have been speaking a few times and said, well, you can kind of understand that if Sam Bankman-Fried is going to lose his entire empire in June, you might be psychologically pushed to do something bad in the hope that maybe you can avert it, right? If the 10% chance is worth it. But I asked the question a while ago, and I did this big Twitter Spaces, like, it is not clear to me that there wasn't systemic fraud in this whole thing to start with. The story is now coming out. It's coming out in waves, and again, nothing is verified here, but it's starting to appear that FTX was just a front for Alameda to capture customer order flow to give them an advantage. It's now becoming clear that FTX-Alameda, because we can now assume they're basically the same entity, which is very bad to have a trading operation that takes advantage of customers. We've also seen that they changed their strategy from being these lower risk traders doing arbitrage, buying one thing, selling another, or very quick trading, to big position takers. And it seems that the Luna debacle was them just providing liquidity all the way, and it blew them up. And they pretended it didn't hurt them. But it seems that Alameda itself had changed what it was doing quite a while ago and was basically a punter. Then there's the confusion of who all these people are, and half of these people don't check out properly. We then hear from the guy who's gone in as CEO, who's now the liquidating CEO, and he's like, I've done Enron, I've done all of these. This is the worst mess I've ever seen. So again, news flow's coming out slowly, but it feels like there was never any proper accounting. That there was never any customer positions that weren't being used by Alameda. Again, not clear yet. That they just pulled everything together, and there was no particular Bitcoin or anything else that you thought you bought on FTX that was being stored for you. That it was just a giant pool of cash that they were just abusing. And it's becoming clearer, even after Sam Bankman-Fried's tweets recently to a journalist, that maybe he constructed his whole personality as well. and that none of that was real. There is a cult of personality that happens in Silicon Valley, that we invest in the founders. That was the Elizabeth Holmes thing, right? The same thing was, you appear like a genius, you act like a genius, people will give you money. And he's a smart guy, right? There's no doubting Sam's not a smart guy. What I think he saw, probably inadvertently, was that in banking, we'd gone through this, which was the banks used to be trading firms and would have customer. And there's famous shops like Salomon Brothers who were huge at this. And then what happened is they would abuse that, because they wouldn't take the customer money. Well, they kind of would, because it's all the same balance sheet, so the bank might blow up. But they would also trade against the customers. And then the regulator said, no, you're not doing that. Then 2008 comes along, so you've now got what's known as customer and house, and there's a Chinese wall. The wall means you two can't speak to each other because you have privileged information if you're advising, or you have balance sheet, etc. And you guys with the customers, we can't give it to the rest of the firm because we would abuse it. So that is fine, except that in 2008, the trading side blows up of the banks, and the customers are going to get hurt because everyone have to get bailed out. So then they changed the regulations and said trading has to be a much smaller part. In crypto, none of that exists. You can do whatever the fuck you want. I don't even know what he was doing was illegal. I'm not even sure using customer deposits is illegal in crypto.
Whoa.
Because Gary Gensler and others had not regulated it. It depends what jurisdiction and how far their regulations got. But this is a problem. I mean, I got caught out in another one, a futures brokerage. I mean, this is not a crypto thing. This is a fraud, leverage thing. I got caught out in MF Global, which was a huge futures broker. And it was run by the ex-CEO of Goldman Sachs, who was the senator for New Jersey as well. I mean, this guy was one of the most powerful people in the world, John Corzine, super famous. And so I have my entire trading funds with them because it's John Corzine, it's MF Global, the biggest brokerage firm in the world. He gets confused and kind of thinks he's Goldman Sachs, takes a huge bet on European government bonds, blows up, and lo and behold, he's been using customer money. So it happens endlessly in the securities industry because that little pot of gold, which is customer money, people just can't keep their eye on the precious that's over there. They want it, they can use it, I can make return on capital, and then it goes wrong. So this story's as old as the hills. It's a deep fraud. It seems it's now on the scale of Bernie Madoff and Elizabeth Holmes and Enron. It's an accounting fraud. It's a cult of personality fraud. It's many, many things. It appears. Again, we don't yet know, but as the news flow comes out, it's staggering. So to go back to your earlier question, is what's the knock-on effect here from here? So my hypothesis is this was the final outcome. This was the whale that happened, right? The end of the crisis. So I think much like an earthquake, we had an earthquake here, when was it? January 2020. 2020 was a freaky year. We started with a massive earthquake in the Cayman Islands, which never happens. And, for a week afterwards, you feel the aftershocks and you're like, oh my God, is this a bigger one? That's what's going on now. So yes, there are going to be some other firms that get into trouble, but pretty much all of the levered trading houses, the levered customers all got taken out quite a while ago between January and June. The levered trading shops, the people who were lending money to the trading shops, people like Celsius and BlockFi, all of those guys, they've all blown up. So who's left? There's a couple of trading firms like Jump and Genesis, and that's it. So they would probably be smaller aftershocks if they failed. So what we've got is peak freak out because the earthquake happened and everybody's hypersensitive. I've never in my career seen sentiment like this, both in crypto and the stock market.
Really?
I mean, Twitter is so bad. I put up a relatively bullish chart, just marginally bullish, to say maybe the Nasdaq's priced in a deep recession. I must have had 100 comments of anger. How dare I suggest? I'm like, wow. People, I mean, there's anger, resentment, fear at this moment that of a scale that wasn't in 2008, wasn't in 2001. I've never seen anything like it.
So what is this cycle of money exactly that allows you to go, yes, there was fraud. Yes, this is a problem, but repeat, and there's still something workable here.
So there is an expression, Warren Buffett's used it, is when the tide goes out, you see who's swimming naked. So the tide out in this is liquidity. And liquidity is driven by central banks trying to stop inflation. So they raise interest rates when they think there's inflation. It slows down the economy. It's harder to borrow money. The whole economy slows down and we restart. It's called the business cycle. And you and I have talked about this in the past. So the economies are cyclical. They're naturally cyclical because the credit cycle, even without central banks, is you kind of lend or borrow too much money, then something happens at the margin and you're like, oh shit, I borrowed or lent too much money, and you pull it all back again and then you do it again, right? So the central banks try and soften that cycle, but they still create it and use it to try and not let economies go too far, like hyperinflation or depression, whatever it is, right? So that's what they're trying to do. That cycle drives the movement of asset prices. And so that's the stock market, the bond market, equity market, the currency market, the crypto market. And with that cycle becomes the human emotion cycle. And the human emotion cycle is, I'm making a fortune, I'm a genius, I can never go wrong, I'm going to be rich, extrapolate, future vision of myself is now going to be driving a Lambo and, etc. And if you think about it, and that's exactly what happens to all of us, and we have to fight that demon, is you start extrapolating out and you start thinking, my vision of my future self has now been ratcheted up. So investments are just a manifestation of your future self, right? That's what we're trying to do. So you got that vision of what you'd like to be, and to get there, you invest because that will deliver that. So if your investments do well, you start stupidly readjusting yourself higher all the time. So then what happens is when the market goes against you, you have to go through the emotional inner journey of, oh, maybe I won't get there, right? That's really hard for people. It's emotionally really hard to kind of plant a flag on that's what my future is definitely going to be, definitely, because I'm really good at this investment game, to I was completely wrong. And what happens is you then over extrapolate on the downside. If this continues, crypto is going to zero. All of my savings that I've been dollar cost averaging, listening to Tom and Raoul, it's all bullshit. This has been a scam. It's the exact opposite. But when you step back, you take a nice logarithmic chart of Bitcoin, and anybody can do that on TradingView or any of those charting things, and it's a nice, smooth, upward trend, which is the adoption of cryptocurrencies and blockchain technologies as a new financial system and a way of exchanging value on the internet. In the middle of that, on a log chart, it just looks like it slowly does that. On a linear chart, it looks like this. But no, it looks like more correct, it does this, collapse. And what happens is everybody goes, when it goes up on a linear chart, everyone goes, it's a bubble. People who aren't involved. Then we all get to the over extrapolation of like, we're all going to be billionaires, let's order my Lambo. Then it starts coming down, it's denial, typical, the human phases of emotion. And then you get to anger and despair, which is where we are now. But that whole story of humanity, liquidity, central banks is all within this long, smooth uptrend that keeps going. And people forget it. They forget it at the bottom and they forget it at the top. And it's as simple as that. So to go back to what you were suggesting, has anything changed in the crypto market? Not a thing. Is the technology being utilized? Has Solana just agreed to use their blockchain with Meta for NFTs? Yes. Are Google working with Solana? Yes. Is Ethereum being built out? Did DeFi fail? No. Does the decentralized financial system idea work? Yes. Are cryptocurrencies being exchanged in a value system on the internet? Yes. Is the number of people growing in that ecosystem? Not a lot, because it's stabilized. But if you look at the past cycle, so the 2017 peak to the low in 2019, we lost about 80% of the active wallet addresses.
Wow.
When I look at it now, we've lost about 30 because the adoption keeps rising. So it really is a psychological game. And it's a long-term game because, and you've talked about this, is we're not involved because we can make money over a 1-year time or a 2-year time. We're saying, listen, the bet here is if you hold on and if you add at the bottom of the panic cycle and just keep holding and don't use leverage and just be sensible about what you're doing and don't keep checking the market every day, the probability of you coming in at the end of the decade and having manifested your future self in a way that probably might be quite unexpected. And if you do that, you won't go through that emotional journey. So what do you want to do? What do you want to do? Do you want to let all of that collateral go to zero, the whole system burn to the ground, and a complete destruction of lifestyle, even whether we're living in a fantasy lifestyle driven by debt and other stuff? Do you want to destroy all of that? I don't think you would. I don't think anybody would.